Welcome back. You're watching NDTV Profit. The Nifty is sub 8500, but the new kid on the block, Syngene, has had a great listing and it's not budging from the gains. It's notched up. It's nearly 25% higher with gains of 62 rupees or so. Okay, we've got some flashes coming in. It's a crucial day today because we understand that the government is going to try to push for the GST bill to be introduced in the Rajya Sabha today. But we've got some reactions coming in from the principal opposition, the Congress party. Mr. Anand Sharma has said that they will object to the GST introduction, and he's also said that the government is trying to mislead the nation on GST. Mr. Anand Sharma has also said the Prime Minister is not sincere or serious about Parliament and getting legislations approved. We will cut across and hear what Mr. Anand Sharma had to say. In the interim, let's focus on Syngene, the new listing. We are now joined by Sarabjit Kour Nangra, Vice President Research, Angel Broking, who's joining us from Mumbai. Sarabjit, thanks so much for joining us on NDTV Profit. Wanted your reaction on the kind of listing Syngene has got. On the higher end of the issue price, the valuations were closer to 28 times. It's trading at a premium to even the issue price. If I applied in the IPO and I didn't get a single share, what should I do? Buy now, wait for a correction?
No, see, as you correctly pointed, the valuation even at 250 was pretty on the higher side. So after the stupendous opening that it has got, obviously valuations have become more clearer. So actually, the thing is, there's a fancy attached to the stock because it's one of its kind listed in the space right now. But apart from TVs, which is another close peer of its own. But I guess so, standalone also valuations at around now after the run-up is pretty significantly higher. Even the largest player internationally, which is much larger in scale, is not trading at such high valuation with similar profitability levels. So I guess so. Doesn't make sense to get in these levels. Our firm recommendation is to buy only on corrections. We would not advise anybody to get it.
Not even for an investor who has a long-term horizon. Say I want to hold this for say 3 years or so, because we spoke to the management and they have these molecules which they are developing, a lot of early stage molecules, plus the scale and the leverage they get from manufacturing that is going to now pick up. Is the visibility strong enough if somebody has a 3 to 5 year time horizon?
We don't deny that the business model is sound enough. They have good profitability. Our issue is with the valuations. Company on an average has been growing on top line on 20 to 25%. Profitability is at all-time high. Client concentration very significantly higher, tilted towards few clients. So these factors make risk-reward very unfavorable for any guy to get in at this point. So even if the long-term potential is there, which we also don't deny it, but the risk-reward is not favorable. So that's why we are not advising anybody to get in at these levels.
Okay, so risk-reward is not favorable, not advising anyone to get in right now. You must have heard what the management really said about, what are their prospects going forward, what exactly they'll be doing, maintaining their EBITDA margins, which they have been holding on since last 4-5 years. So, what could be probably the right entry point to Syngene, or do you think it should be like a wait and watch sort of a stock which one should really consider?
Yeah, it's more of a wait and watch stock. It's not a stock which I will keep in my radar unless the valuations are very attractive. Because even if you look at, there are pharma companies with similar profitability. Like you consider the case of Sun Pharma. I mean, it's not trading so expensive as Syngene is trading at these valuations. So there's no trade-off for me to get into that space just because it's one-off stock available right now. It's good management, good healthy execution, everything given. But valuations are not justifying the risk that's also associated with the business. They are getting into contract manufacturing, that could be a lumpy business. They have a client concentration with top 10 forming 72%, that is also area of risk. So, definitely they will scale up the businesses next 15 years. So 20 to 15% growth and 30% kind of ROE is justified at the price valuation at these valuations. So we wouldn't justify or tell people to get into at these levels. It's more of wait and watch unless it becomes cheaper to get in.
All right, Sarabjit, we'll leave it there. Thank you very much for joining us and giving us your response to what should really one consider when it comes to Syngene in particular. The valuations are looking pretty expensive at this point in time. Today was the listing. The counter is up about 24.5% at 311.25 per share. Before we slip into a break, let's quickly get you Sarabjit Engineering. It has just now come out with its first quarter earnings.